Well, hello everyone, and welcome to Wilson Pateris's webinar on JobKeeper 2.0 and COVID-19 government grants. So thank you all for attending this morning. To say that we're living in slightly unusual times would be a bit of an understatement. So we thank you all for sparing the time today from wherever you may be, probably most likely at home at your home office. First thing I'd just like to acknowledge is it has been a rather challenging time for many people, particularly our clients who are participating in business. And one of the recent bits of commentary that I did see around the economy was that particularly service-based businesses have been affected. So today's presentation is all about trying to help you to make sure that you're getting all the possible benefits that are available within the governmental system to support you through this rather unusual time. So I'm Nick Pateris, one of the directors at Wilson Pateris. Today's presentation will be presented by Mark Fort and Sash Nikolovsky, two of the principals of the Wilson Pateris business. And both Mark and Sash work quite actively with a lot of business clients and individuals who are working through this current period, which has been quite challenging for all. Today's presentation, being a webinar, is a little bit different to how we would normally run things as a physical event. So we have a couple of things on your screen that I'd like to point out. Firstly, we have a poll, and I'll be launching that shortly. The poll asks a couple of questions that will be helpful for us to know more about your situation. So we'll, if you can you please participate in that poll and answer those questions? It'll help us to frame up some important information back to you. There's also a Q&A button you'll notice on the webinar. That Q&A button allows you to ask questions. It'll allow us to answer questions throughout the presentation. So please ask as many questions as you can. What I'll intend to do in this presentation is to take those questions and ask them to the two presenters throughout the course of today's event. We'll try and keep it to no more than 1 hour today. Yeah, please feel free to ask those questions. There'll be a little survey we'll circulate to you at the conclusion of today's presentation. So I think everyone's probably logging on now. I can see we've got most of our participants on board. So thank you for jumping on. And yeah, first of all, over to you, Mark. Thanks for participating in today's presentation and putting forward some important information. JobKeeper 2.0, bit different to JobKeeper 1.0. Certainly, I think the government's had more time to put some rules in place and change the eligibility. So it's now over to you to tell us more about it.
Okay, thank you very much, Nick. I'll just start off to saying that just before at 9:59, my internet did cut out with Telstra and the NBN. So I'm actually on my phone hotspot at the moment. So hopefully that does the job. So yes, definitely what we're going to cover today is in relation to JobKeeper. And it's really more just like an overview, a bit of an awareness campaign as well. Not so much like a very technical type of session. So we'll go through 4 different areas that I want to cover. So the first area that I want to cover as we go through the slides, we'll just have an overview of the JobKeeper changes. The second area that we will look at is the effect of the new changes on the employees. We'll have the impact on the employers. But probably more importantly, we'll look at a bit of an action plan as well in terms of what you should be thinking of and probably what you should be doing pretty much immediately. So let's get right into it. So the next slide as we go through is in relation to the first change, just in a very, very summary type of format. As we well know, we're JobKeeper 1, the original JobKeeper, that was for the period of 30th of March 2020 to the 27th of September 2020. What was announced a little while ago, about a month ago, was that there will be 2 additional JobKeeper periods. And the first one will begin from the 28th of September, and that will run through to the 3rd of January. And the third JobKeeper period will run from the 4th of January to the 28th of March. So what you really need to be aware with those 2 additional JobKeeper periods is that you'll have to re-register for each one. And as we go through the slides, we'll go through that in a little bit more detail. So just going to the next slide. The next slide. So the other changes, we're looking at the decline in turnover. And as most of you would be aware, is that it's all based on what your turnover is in comparison to a comparable period. So under the current rules, which end at the end of next month, if your turnover is less than $1 billion, and then your turnover, if your turnover drops by more than 30%, then you're eligible for JobKeeper. If your business has more than $1 billion in turnover, then your turnover must fall by more than 50%. So that's based on either projected or actual GST turnover, which is basically your sales. So what's changed in terms of the announcements is that we won't be using this concept of projected GST turnover anymore. We're looking at the actual turnover. So if you look at the chart on the next, on the right-hand side, like basically at the moment, you can compare either months or quarters. So in JobKeeper 1, you can compare your June quarter or September quarter 2020 and compare that to the June 2019 quarter or the September 2019 quarter. Well, you've got the option of actually looking at comparison months. So say if you weren't eligible up to June 2020, you can look at July, August or September individually and compare that to those same months back in 2019. What we could actually do is actually project your quarter for September up to September 2020 is what my GST turnover is, compare that to the September 2019 GST turnover. And if the drop, assuming that your income is less than $1 billion in turnover per annum, if it's dropped by more than 30%, then you're eligible for JobKeeper, number one. So what the changes are is that now we're looking at a quarter-to-quarter comparison. There's no more monthly comparisons. So if you compare your September 2020 quarter, and this will be based on actual GST turnover, and you compare that to the September 19 quarter, and there's been more than a 30% drop, then you're eligible for JobKeeper number 2 up to the 3rd of January. And if you get through that stage, and then we look at the 4th of January to the JobKeeper number 3, then we look at December 19 to December 20 turnover as well. If the drop is 30%, you qualify for again. So the important part to note is that you must register for those 2 different quarters. We don't have the dates in terms of when you have to register just as yet. That hasn't been announced by the tax office, but what was announced in the Treasury fact sheet that came out a short while ago was that you have to lodge your application before you lodge your BAS. So for September 2020, for that quarter there, for JobKeeper number 2, your BAS will ordinarily be due by the 28th of October. So you would need to submit your application to enrol in JobKeeper number 2 before you lodge your BAS, but we don't know the date yet. So that's sort of more like a watch your space type of scenario. And just a quick note on GST turnover and what it actually means. So it's going to be based on what you record in your BAS. But just a point to note, if you did sell, say, some capital assets during that quarter, say, for example, some machinery or trucks or what have you, just so you can sort of get some cash in to help, I suppose, make ends meet. When you sell a capital asset, ordinarily that's not included in what your revenue is. So just something to be very, very mindful of when you're looking at your comparisons of revenue.
So Mark, just a quick question from one of the members of the audience in relates to charities and the turnover tests. And the question is the turnover test for charities still at 15% as a decline?
It is still at 15%. Yeah, that has not changed at all. So the percentages haven't changed. The only thing that has changed is that we don't use a projected GST turnover anymore. It's all based on your actual GST turnover, and that will be what is recorded in your BAS.
Thank you.
Okay. So we'll move on to the next slide. So the other changes, we're looking at eligible employees, and this is one that's going to require a bit of work, and we'll get through that a little bit more as we go through the slides a little bit later on. But as most of you may be aware, is that for JobKeeper 1, you must have employees that were employed as at the 1st of March 2020. With the new changes, they've actually extended that out to employees that were employed on the 1st of July 2020. But we'll explore that in a little bit more detail in a few slides coming up. The next one is in relation to rates. Maybe Nick, with the polls, can we sort of move that just off the screen a bit? Because that's sort of just blocking the viewing there. Yeah. Let's see if I can minimise it. Sorry, I can minimise it. That's fine. Sorry. Sorry, just technology. So with the rates, currently with JobKeeper 1, the rate is $1,500 per fortnight. So whether you're part-time, full-time, or casual, is $1,500. So some employees might have got pay increases just by default, in effect. With JobKeeper number 2, that rate will decrease to either $1,200 per fortnight or $750 per fortnight. And in JobKeeper number 3, it reduces again to $1,000 or $650. So with those those two different rates, it's all going to be based on an hour type of, like a per hour rate, like an hourly rate. So what that means is that any employees who have worked at least 20 hours per week, they'll be entitled to the full JobKeeper rate, which is the $1,200 or the $1,000. Any employee that has worked less than 20 hours per week will be at the smaller rate, the $750, $650. How that 20 hours is measured, it's going to be measured based on the 4 weeks, prior to the 1st of March that person was employed, or the 4 weeks prior to the 1st of July when that person was employed. So employees that were employed on the 1st of March, they'll have there's two tests. There's 2 time frames which they can use. They can either use the 4 weeks prior to the 1st of March or the 1st of July, and they can use the 4 weeks that gives them the highest amount of hours. So say, for example, prior to the 1st of March in those 4 weeks, they worked 18 hours, and prior to the 1st of July, they've worked 23 hours, they'll be eligible for the full rate. If not, if it's less than 20 hours, it's you get the partial rate for that. So that raises quite a few interesting type of questions. And given this isn't legislation yet, so we've still got to see the finer detail of all of this, but maybe a scenario may be where an employee was part-time prior to the 1st of March and prior to the 1st of July, then subsequently they become full-time after that, after the 1st of July. So unfortunately, based on what we know at the moment, they'll be entitled, or the employer will be entitled to pay them at the lower rate, being the partial rate, which is the $750 or the $650. And conversely, if they were full-time before then, prior to the 1st of March or prior to the 1st of July, and then they become part-time afterwards, then they'll be entitled to the full rate. The endeavour will be in the detail. We'll need to see the legislation and explanatory memorandum to go through those scenarios. Maybe another example may be people who are on annual leave during those periods. So how do you calculate their hours? So that will, like I said, there might be alternative tests, just like it is with GST turnover, where you can sort of look at the alternative test and say, okay, based on the basic test, if your turnover isn't dropped by 30%, but let's look at different alternative tests, such as you might have bought a new business, for example. So therefore, there's alternative tests to see whether you have met the 30%. In this case here with employees, you may say, well, on those 2 examples that I've just given, there might be alternative tests for, say, people that have gone from part-time to full-time or are on annual leave during those periods, and you can't really assess their hours, how much they've actually worked. So it's something sort of to look out for.
So Mark, a question we have coming through relates to even going back to the basic eligibility. If somebody didn't get the JobKeeper 1.0, can they now qualify for JobKeeper 2.0? That's the first question. And I guess the second part of that question is, if they don't qualify for JobKeeper 2.0 in the current period, can they qualify in future periods for JobKeeper, effectively JobKeeper 3.0?
It is. That's a very good question. I've actually did a fair bit of research on this one, and it is actually in the slides coming up further down the track. But I'll answer the question now. I'll answer it while it's hot. So basically, the Treasury fact sheet, I'll just read what it said. The JobKeeper payment will continue to remain open to new recipients, provided they meet the eligibility requirements and the turnover test that apply during the relevant JobKeeper payment period. So the key word there is it will remain open to new recipients. So based on the Treasury fact sheet, if you don't apply for JobKeeper 1 because you weren't eligible for it, then JobKeeper 2 or JobKeeper 3 will be able to apply for that based on the wording in that Treasury fact sheet.
Okay, great. Thank you.
Okay. So let's move on to the next slide just to summarise where things are at. So it's a timeline of change. So with the new employees that were employed on the 1st of July, that in effect came into effect on the 3rd of August. What that means is that those employees that were employed on the 1st of July that do qualify are able to receive JobKeeper for the payment fortnights beginning the 3rd of August. So given that it is a new change, the tax office has said that we'll give you to the 31st of August to make sure that you pay those new employees your $1,500 per fortnight. So that runs out on Monday. So Monday is a day which you have to make good all those type of payments. On the 24th of August, just to backtrack, as you may be aware, that employees must fill in a nomination form saying, yes, I'm eligible to receive JobKeeper. I'm not receiving JobKeeper from anyone else. So therefore, they have to provide the employer with a nomination form. So that nomination form is not submitted to the ATO, it's kept on file, and it's there for record-keeping purposes. But it's very important that those employees do receive it. The next change will happen on the 28th of September, and that's when JobKeeper 2 commences. The 4th of Jan is when JobKeeper 3 commences, and JobKeeper ends on the 28th of March. So in effect, JobKeeper started on the 30th of March. It finishes on the 28th of March. There's 12 months worth of JobKeeper, 26 fortnights in total. So it has been it has been great to actually have a wage subsidy for your employees of pretty much at $3,000 per month, but it will run out. Just interesting to note that with JobKeeper and this particular piece of legislation, there's been 7 amendments to it. So it is a forever changing scenario, and we're actually waiting for more legislation to come out over the next couple of days in relation to in relation to the employee test and the eligibility, and just really putting in legislation everything that we've just gone through in terms of those changes. So move on to the next slide. So we're looking at who is an eligible employee. It's really more just a refresher. I've got six conditions on the screen. The first one, very obvious, must be employed in any fortnight up to the 1st of July. There's an age condition, so which means ordinarily it must be 18 years or over. But if you're 16 years or over, you must be independent and not a full-time student, as defined under the Social Security Act. Condition number 1, employment status. You're a full or part-time employee. Casual long-term employee. Yeah, you're a long-term casual employee as well. And what that means is not someone just comes and goes. It's more that you have the systematic, regular, repetitious type of employment relationship, maybe 2 or 3 days a week. But it's got to be repetitive and systematic in nature.
So Mark, just a quick question on casual employees. So with casual employees, is it fair to say that it's a little bit circumstantial? It's actually not defined what is a casual for the purposes of this eligibility, or is there some more commentary around that coming out? It's not
defined. I'll take it back. I mean, it is defined in the sense that on the ATO website, when you look at what is a long-term casual, and it's actually based on the Fair Work Act as well, in terms of what the long-term casual is. But the work that you do for a particular employer must be systematic and regular.
Yes.
So that's what it really is. Not someone who comes in maybe once a month or it's very sort of unknown what the hours are going to be. It must be systematic and regular. So it's all defined under the Fair Work Act. And that's probably where a good spot would be to look at it.
Yeah, okay.
Okay, I see a question from Graham Greenwell to all panellists. Will a casual qualify if the 12-month period is to July? That's a very good question. So a casual that was employed on the 1st of July 2019, a long-term casual, they would now, under the new rules, where it's up to 1 July, when in terms of looking at your employee start date, they would apply it because to be defined as a long-term casual, it must be employed by that one employer for 12 months. So if they begin on the 1st of July 2019 and they're still with that same employer on the 1st of July 2020, they will qualify for it. So I hope that answers your question. So moving on to the next slide. Okay, so what the legislation has done, we've really got two categories of employees as from the 1st of August. We've got the 1st of March 2020 employees, and we've got employees on the 1st of July 2020. So there are two different categories. For the 1st of March 2020 employees, there's absolutely no change or no impact that you, the employer, would have to do. So the nomination form that they have already lodged with you stays the same. They do not need to reapply. That will stay in place for these changes. In relation to the 1st of July 2020 employees, I mean, what it's really done is really expanded the net, and this really goes back to the question that Graham just asked. So what you need to look at with your employee base is to look at, okay, people who weren't qualified on the 1st of March because maybe they were 15 years old, maybe they were 17 years old, or maybe they were long-term casuals that were only employed for 9 or 10 months. They're now sort of all trapped in there now. Not trapped, wrong word, but they've all become now employees. It may be employees that were non-residents as of the 1st of March, but are now residents under maybe tax residents or under the Social Security Act as well. That would also be captured there as well. So what it really does is it really does expand the net of employees eligible for JobKeeper now. So the impact on those 1st of July 2020 employees is that they must start receiving JobKeeper. And as I mentioned before, that the JobKeeper payments, they should be paid their JobKeeper up to the 31st of August, and that's for fortnights commencing on the 3rd of August. So they must be receiving their JobKeeper payments no later than Monday. And they must also submit a new nomination form as well, which you can either use the ATO version or you can actually create your own version. So that's
Mark, on the nomination form. So those forms, there's an approved form on the ATO website, is there? Is that where clients can...
there is, yeah. It's on the ATO website. It's very easy to download, and basically it's got minimal information on there. Or you can create your own, but probably the easiest thing to do is just go to the ATO website and download that form. For JobKeeper, I believe it's a new nomination form as well for the 1 July 2020 employees. So I just got a few few extra questions in there as well. But
so that's actually a time-sensitive issue, isn't it? For anyone looking to get JobKeeper 2.0, those nomination forms have to be supplied within the next few days.
Oh, exactly true. They have to be signed and supplied just by letter of the law. They have to be done and signed. Yeah, definitely.
Yeah. Definitely. Another question that we have coming through on the chats is around sole traders or partnerships that perhaps don't employ people. When we saw JobKeeper 1.0 had some an allowance for people who are business owners without employees who are still able to get some form of JobKeeper depending on their circumstances. Is the same thing applying here for JobKeeper 2.0 and 3.0?
Yeah, that doesn't change there at all. So what you're talking about is a person who's deemed to be an eligible business participant.
Yes.
And what that person is someone who might be running a company, for example. It may be a sole trader, could be a doctor or a tradie who doesn't employ anybody. They're not paying themselves a wage. And as long as they're actively engaged in their business, and then they're eligible for JobKeeper 2 and also JobKeeper 3 as well. So that doesn't change. So
they would prepare a nomination form essentially for themselves?
They would, and there's a form on the ATO website as well for eligible business participants. So that form's on there, and obviously the same payments as employees. But they do have to nominate for that and enrol for it for JobKeeper 2 and JobKeeper 3.
Great. Thanks.
Okay, just a point in relation to these nomination forms, and we're saying there's a lot of record keeping here as well. Just be very mindful that the ATO will be and has engaged a lot of resources in relation to auditing JobKeeper claims. They're looking out for fraudulent behaviour or people who've manipulated the system to enrol in JobKeeper. So my recommendation to all businesses is, one, make sure that you've got a lot of documentation about JobKeeper, a lot of documentation in terms of how you've worked out your reduction in revenue there as well, being the 30% or the 50% or the 15% in the case of a charity, and also have all the nomination forms in place and do your cross checks, make sure that these employees have not nominated anywhere else. That's very, very important because the AHO will be spending a lot of resources. I think it's a 2-year project from what I've heard, just around the traps. So just be very mindful that you have everything ready to go if the auditors do come knocking on your door. So that's a very, very critical part which tends to get overlooked just a little bit. All right, let's move on to the next. This is really just an action plan, just part 1 of the action plan in relation to employees. So the first thing that needs to be done pretty much ASAP, if you haven't done it already, is to identify employees that are eligible as of the 1st of July 2020, ensure that they have received an employee nomination form, and doubly ensure that you receive it back signed, and then you meet the wage condition by the 31st of August. I've got a few notes down the bottom of that slide in relation to employees. The employee must actually be working as of the 1st of July 2020. If they have signed an employment contract and they're commencing after the 1st of July, they will not qualify. So just be very mindful of all that. So basically, as a general rule, any employees hired after the 1st of July are not eligible. But then I'll come to 2 different types of employees. One is called a recommencing employee, and that employee will qualify in the situation where they were a 1 March employee of your business. You terminated them in between the 1st of March and the 1st of July. They were never employed by another employer, but they resumed employment with you after the 1st of July. They will still be deemed, they're grandfathered in a sense, where they'll still be deemed to be a 1st of March to a 2020 employee. So they will be eligible for JobKeeper. So that's the first one, which is a bit of a nuance. And the other one is re-nominated employees. And this change came into legislation on the 25th, which was only a couple of days ago. So what a re-nominated employee is, it's an employee that was employed on the 1st of March 2020 and had nominated with another employer to receive JobKeeper. They were subsequently terminated between the 1st of March and the 1st of July. Then they found new employment with another employer, totally unrelated. In that case, that person will need to re-nominate as an employee under the new business and send in that nomination form. So just something to be mindful of. Prior to the legislation on the 25th, which is a couple of days ago, that wasn't the case, where that person would not be able to receive JobKeeper, but the law has changed with an amendment to the legislation. So just something
So Mark, an interesting question is there might be scenarios where, let's say, because of the stage 4 lockdown, particularly here in Victoria or in Melbourne, employers might have actually made their staff redundant or dismissed them in the past 4 weeks. Does that have any implication with the JobKeeper rules? Or because it seems to be that what we're talking about here is people who are maybe terminated back in the April-May period, for instance, and then reinstated recently, versus maybe being made redundant from their job now and then perhaps being re-employed in a future period. Maybe it might be September or October if we can go back to stage 3, for instance.
Yeah, that's an interesting question. With terminated employees generally, is that once an employee is terminated, then JobKeeper stops for that person during that fortnight. That's just the basic rule. In the case where you're saying that person was a 1 March 2020 employee, they were still employed on the 1st of July. They were subsequently terminated, say, 1st of August, as an example.
Yeah.
On the 1st of August, they're not deemed to be an eligible employee anymore. So you stop JobKeeper at that point in time. But if then subsequently they haven't found a job anywhere else, and then they are re-employed by that same employer, based on their re-nomination, when they were a 1 March employee, they were terminated, and then they've come back to the same employer, without seeing the legislation that hasn't been released. And so that's my disclaimer at the moment if I get it wrong. But based on what I've just said, they would most likely be eligible for JobKeeper again.
Yeah,
that would be my gut feel for it.
The overarching message there may be for employers, particularly our clients, to be careful when making that decision around terminating employment, because it could affect a future JobKeeper application or eligibility for those particular employees.
Yeah, that's right. So I mean, the question then begs is what happens if you get it wrong? So if you're paid someone JobKeeper that wasn't eligible for it, in the business, that's deemed to be an overpayment, and that business will need to pay that JobKeeper section to that particular employee back to the tax office. In the case where an employee has nominated an employer, so nominated an employer, but also nominated with another employer, so they're receiving two lots of JobKeeper payments unbeknownst to the current employer, then the obligation is on the employee. They would have to pay back their JobKeeper payment. It's not incumbent on the business.
Yes.
So that's just something on the side.
Yeah.
All right. Let's just have a refresher of eligibility for employees, and probably sort of this partly answered already, but just to refresh on that, there's two types of eligible entities, one that employs and another entity that doesn't employ. Business must be carried on the 1st of March, must be a significant fall in turnover. That's really just standard between the two different classifications. If you're an employer, you must have employees that are currently employed for the fortnight you want to claim for. If you're a non-employer entity, such as a sole trader, you're actively engaged in the business. So the overriding principle of JobKeeper is that you have been sufficiently affected by the coronavirus, where your revenue has dropped by so much, which is a 30% threshold, that you need financial help just to get through these difficult times. That's your overriding principle, and that's what we base your JobKeeper claim on. And then from there we can go through into the greater detail in terms of whether you do qualify. But if you do have a significant fall in turnover, then probably 99.999% you will qualify for JobKeeper.
A question we have coming through, Mark, is that in relation to grants, if an employer is receiving a grant of some form, is that included in the turnover test?
I don't believe it is, but that's a question that I can come back to the group with. I can come back with an answer, but I don't believe it is, because I think it's just based on your ordinary regular revenue. I think grants are excluded.
Okay.
I don't believe it forms part of GST turnover as it is.
Yep, that's right.
Yep. Okay. So here's a question that was raised before. So, I mean, just to reiterate, if you don't qualify for JobKeeper 1 because your business was going well, you can still apply for JobKeeper 2 or JobKeeper 3. And there was a bit of confusion with that. There was different, I suppose, tax bodies that said that you couldn't, but then that was clarified in the Treasury fact sheet. So you definitely can qualify for that. And we'll get a bit of an example down below, which shows that you didn't meet the turnover decline in the September quarter, but you did in December. So therefore you qualified for December. So that's very straightforward. I think we'll move on to the next one. So this is the action plan, which I would be suggesting that you do now, is that you start assessing what your income will be for the September quarter. July's already happened. August, we're just about to close off on. You have a fairly good indication what your September figures will be. So that way you can start planning and see what the impact of JobKeeper would be into your cash flow. So point number 2 is that I would be preparing cash flow budgets, and you'll see, okay, what's the effect of receiving JobKeeper compared to not receiving JobKeeper on your cash flows? And based on all that, how does that impact your business and how you pay your suppliers as well? Not only your staff, but your suppliers. So cash flow budgeting around these times are critical. It's a very important tool. So you can really factor in terms of, I suppose, what are the necessary expenses that you have to pay compared to the discretionary expenses that you probably hold off for another 3 or 4 or 6 months or so. And action plan number 3 is to really start thinking towards applying for JobKeeper. At Wilson Pateris will be on your back anyway in terms of enrolling and just making sure that you are eligible for it. But we've only got pretty much, I would say, to the end of September. That's when I would imagine that these applications will need to go in without knowing what the HO is going to do at this stage, because you have to bear in mind that the JobKeeper fortnight, of which JobKeeper 2 will start from, begins on the 20th of September and covers a paid period to the 11th of October. So during that time period there, I would say that you'll need to apply for JobKeeper. And just a quick note for JobKeeper 3, as I mentioned at the outset, is that you would need to reassess your eligibility again for JobKeeper number 3. So there's another 2 registrations that you may need to do. Just to go on the rates, I think we've covered that a bit earlier on. So just to refresh on that, these are the rates where it's either the full-time rate of 1,200 or the part-time rate of 750 for JobKeeper number 2 and 1,650 for JobKeeper number 3. It's all based on the average hours worked in a 4-week period, and those 4 weeks either prior to the 1st of March or prior to the 1st of July, whichever gives the highest amount of hours. We'll just wait for the legislation to come out to see if there's any type of alternative test, as I mentioned before.
We did have a question earlier, Mark, come through from one of the attendees around that full-time rate versus the part-time rate. We mentioned there the 20 hours that has to be worked. Do we have much detail around what that 20 hours mean? As in, does it have to be someone who's worked at least 20 hours for a significant period, let's say from the 1st of July, or is it something that it can be just a once-off 20 hours? Do we have much indication as to what that might look like?
We don't have a lot of indication or a lot of information about it. From, I suppose, just reading through the commentary, is that it's once you establish the rate, that's what it's going to be for JobKeeper number 2. So there are 2 test periods, either 4 weeks before the 1st of March or 4 weeks prior to the 1st of July. Once you set that period and once you calculate those hours, they're the hours that you have to go on to pay your JobKeeper payments.
So what that means then is that a person's hours, whilst the hours are set based on the eligibility for JobKeeper, as in whether you're full-time or part-time, but then subsequently, because of the economic environment, that particular team member may actually go to 0 hours, and they may go to 5 hours, and they might actually be being paid a full-time rate for maybe fractional work or no work at all.
Yeah, that's right. And just to clarify, because the question's just popped up on the screen, it is 20 hours per week. It's not 20 hours for those 4 weeks, it's 20 hours per week, just to make that crystal clear. So as I said, there's a few questions that will need to be raised in terms of like going from part-time to full-time, full-time to part-time, whether employees were on maternity or paternity leave during those 4-week periods, whether they're on annual leave or long service leave. They're all the type of questions which we don't know the answers to. But I mean, hopefully there'll be a lot of guidance coming out from the ATO over the coming weeks, I would imagine, to really sort of maybe make it very, very clear for us. Okay. And just to recap, in terms of an overall summary, what we should be doing now is assessing our employee list as of the 1st of July to determine who is now eligible. Make sure that you pay the minimum $1,500 for fortnights ending the 16th of August and 30th of August, and that's got to be done by Monday. Your employees to complete the employee nomination forms, begin to review your estimated 2020 turnover and compare it to September 2019 to assess whether you could qualify for JobKeeper and start updating your cash flow budgets as soon as possible. In relation to rolling for JobKeeper 2, we'll just wait for the HO guidance in relation to dates.
So just a quick recap there, Mark. So the important thing that our clients need to know, and people attending this this session, is that in the next week there are some things they're going to need to do, particularly around the nomination of employees and the payment of the $1,500 to ensure that they are effectively in the system, so to speak.
Yeah, that's right. So that's exactly true. Employees are the big issue there as well. So just a question from Graham in relation to the turnover test. It is, so for the JobKeeper number 2, the turnover test will be for the quarter, July, August, September. So for those 3 months there. If you want to still apply for JobKeeper number 1, you can still look at your August turnover or your September turnover as well. Your September turnover can be projected turnover as well. So it's not based on your actual turnover, even though it can also be based on a projected turnover. So if you haven't qualified for JobKeeper number 1 and you believe your income has been significantly affected, where you might meet that 30%, we can look at it from a quarter point of view. Look at it from a quarter point of view or a monthly point of view. With JobKeeper number 2, it is all based on quarter. There's no monthly test there at all.
Great.
Hopefully that answers the questions.
Well, thanks very much, Mark. And in the interest of time, we've actually had a lot of questions from the audience, and we're very thankful for that. It's a very complex issue in terms of understanding these JobKeeper rules. And what we'll endeavour to do, we haven't answered every question. We've got through quite a number of them, but But what we'll endeavour to do outside of this session is we'll come back to each of you individually and have your Wilson Pateris accountant work with you on your own eligibility and the various tests that apply. So look, thanks very much, Mark. Very appreciative of that. It's been a very informative presentation. We'll now jump across to Sash, who's been kindly waiting there in the wings, watching. I did forget to mention to the audience that both Sash and Mark are Carlton supporters, so they've both been quietly just getting a little bit excited this year, seeing their team win a few games and even the possibility of some finals action, albeit not here in Victoria. But Sash, welcome aboard.
Hey Nick, how you going? And welcome everyone. Thanks for attending. And yes, hopefully the Blues can bring it home this weekend as well.
Well, as a Hawks fan, I can say I don't look forward to that, but that's okay.
Great to hear. I suppose if we can maybe press on with the next slide, Nick, we can get into the summary of what I wanted to chat about today. It's not as technical as the JobKeeper changes, obviously, but it's more an awareness around what the Victorian government is assisting businesses with at the moment in terms of current support around certain aspects and certain types of businesses. So we'll probably be covering the Business Support Fund expansion program that was announced recently, and also look at the hospitality industry and what support is available for them, along with the recent tourism support that was announced by the Victorian government, as well as just touching on some of the mental health initiatives that are out there as well for small business and businesses in Victoria at the moment, because we all know in these difficult times it's affecting different people in different ways. So it's always important to mention what sort of support is out there for all sorts of social and mental health issues. Just as a recap in relation to the business support package that was announced, as everyone's aware, on the 2nd of August, Metropolitan Melbourne went into lockdown and stage 4 restrictions were announced. On the 5th of August, stage 3 restrictions were announced for regional Victoria, which includes Mitchell Shire. What this effectively means is the businesses effectively have limited operational capacity, or potentially can no longer operate in their normal way of doing business. Moving on to the next slide, gives you a bit of a briefing on the type of support and the amount of support as a summary of each particular package. So the Business Support Fund expansion program effectively gives employers $10,000 and $5,000 for businesses that actually employ people, and $5,000 for obviously employers that employ people in regional areas. There's a $30 million dedicated no-time economy fund that's been set up. There's $26 million that's gone into the mental health support for Victorians running small businesses. There's a $10 million business mentoring program, a $40 million regional tourism business program, and $20 million been allocated to support the Melbourne CBD area as well. Moving on to the next slide is just a summary of what's out there under the Business Support Fund. This particular fund is, I suppose, a part 2 of what was previously announced, where businesses could apply for a grant of $5,000. So this particular program expansion now allows $10,000 for employers that employ people in Metropolitan Melbourne, and $5,000 for employing businesses in regional Victoria, including the Mitchell Shire. Now, it's important to note that businesses that actually received the first business support fund of $5,000 don't effectively have to apply for this, because they will automatically get a top up of a further $5,000 to make it $10,000 for the whole program. So if you've received the $5,000, you'll automatically get another $5,000 coming into your bank accounts from the Victorian government. One aspect to take note of is that this particular program has got a closing date of 14th of September 2020. So if this is something that can apply to businesses, just be wary of that date, because this is one of probably the only one that's got a closing date at the moment. So just be wary of that. So as I stated earlier, that particular fund was just a flow on from the first fund that was announced. So at the moment, who can apply for these particular programs? So a lot of these programs, they're not overly technical at all. They're based on just applying, and it's more around who's eligible and who's not. So if a business is eligible, then effectively you can apply for these programs. So there's not a lot of technical things to worry about. It's more around, am I eligible and can I apply? So for this particular program, we're looking at businesses that are located in Victoria. They have to be a participant of the JobKeeper scheme at the moment. They have to employ people. They have to be registered with WorkSafe on the 30th of June 2020. They need to have a payroll of less than 3 million. They're registered for GST and hold an ABN number. And they also have to be regulated by a federal or state regulator, such as ASIC in this instance.
So, Sash, a quick question we've got coming through at the moment is in relation to sole traders. So,
Yes.
Sole traders can come in a couple of forms. There can be a sole trader as an individual trading.
Yes.
There can be a sole trader who actually sole trades technically through a company.
Yes.
And that sole trader company, for instance, might employ that person. They might be on an employee arrangement.
Correct.
So how do those little things affect their eligibility for these grants?
Yeah, there is a few little nuances there, because effectively what this stipulates is that you have to be employing people. Now, if you're employing a director of a business, for example, and you're on payroll and you've got a WorkSafe policy in place, then technically you're eligible. Now, there are some self-employed people out there that will not fall into that category, and unfortunately, they actually are. They fall out of this scheme, which is unfortunate. Now, there have been calls to try and bring something in to assist that other category of businesses, but at this stage there hasn't been much in that space at the moment. So at the moment they're concentrating on businesses that are actually employing people and have got WorkSafe policies in place.
So the big test there is you have to be an employer who has someone on payroll, whether that's yourself or another person, a third party.
That's right. Yeah, spot on. Yeah, exactly. Yeah. In terms of how the funds received can be used, I suppose they can be used in various guises within the business, meeting utility costs, salaries, legal support, financial support for various things. You can use it to drive some marketing programs, or just operational costs within the business. So I suppose the how it's used is left up to the business. The next area that I wanted to touch on is the support that was introduced for hospitality businesses in Victoria. The first, I suppose, tranche of that support is the CBD Small Hospitality Grant, which effectively supports small and medium hospitality businesses that are located within the CBD of Melbourne. And particularly this particular grant is one that will assist people that actually have received a previous business support fund that ended in June 2020. So the type of support that is available under this particular scheme is it allows businesses that operate in the CBD a one-off grant of $5,000, where the business has got seating of in excess of between 11 and 100 seats, or they're eligible for $15,000 if they've got seating capacity of 100 seats, 101 seats or more. And this is just to support the business in its operational requirements. Again, a lot of these schemes fall on the eligibility side of things. So in order to obtain this particular grant, a business must be a recipient of a business support fund expansion that we just mentioned. And normally speaking, if they were eligible under the business support grant, that they will automatically get an invitation to apply for this particular scheme. Otherwise, you can apply for it online via the Victorian Government website. The business must also operate within the localities or the postcodes relevant to that area, which includes Melbourne 3000, 3005, 3006 and 3008. They must operate a type of business which is effectively restaurant, cafe, pub, bar, club, reception centre, coffee and dessert outlet or takeaway venue, and must have capacity of 11 seats or more. And they must have the appropriate certification there under the Food Act. And they must not be receiving assistance under the Nighttime Economy Business Support Initiative, which we'll discuss in the next couple of slides, will be part of the live venue program. Now, the next area that I wanted to touch on was obviously, again, in relation to hospitality, but it's under the heading of Hospitality Business Grant Program. This particular program is assistance for food service businesses that are affected by the stay-home measures, and they're eligible for one-off grants under the program. It also assists businesses that actually operate more than one premises as well. So if you've got, say 2 or 3 premises out there, you'll be able to get $5,000 for each additional premise that you operate in Victoria, capped at a maximum of $20,000. And an additional grant is offered if the business is actually located in Melbourne. So $20,000 can be added to that pie if the business is located in the CBD of those postcodes there that we mentioned earlier. Again, eligibility programs or requirements under this particular grant is such that it must be located in Victoria. It operates a food type business such as restaurant, cafe, pub, and hold the appropriate Food Act certifications. It has to have a annual payroll of greater than 3 million and lower than 10 million for the 19-20 financial year. It has to be GST registered as of the 30th of June, and also hold an ABN and be also regulated under federal or state regulators such as ASIC. Now, an important aspect to, Nick, we can just go back one slide there, Nick, if we can. An important aspect there is that if you've received funding under a different tranche, which is the Victorian Live Music Venues Program or the Business Support Fund Program, you aren't actually eligible for this particular program. There is a little bit of overlap between some of these programs that are offered. So if you're able to get one, you might not be able to get the other. So you just need to be wary of that just in case you do apply for them. Oops. The next one I just wanted to mention briefly is the Nighttime Economy Business Support Initiative. So pubs and clubs and restaurants and so forth that operate are able to get some commercial rental relief for businesses that are impacted under the pandemic, who aren't effectively covered by the Commercial Tenancies Relief Scheme that was announced earlier on in the piece by the government. So the support that's available is to assist venues that have got turnover of up to 50 million and operate as part of a group. So effectively what this means is that they can get free mediation services to help the business and the landlord hopefully come to some kind of agreement around rental relief during the actual pandemic itself. Yeah, so in relation to this particular program, you can get reimbursement of up to $20,000 per business group for expenses that you might have incurred in obtaining advice in relation to tenancy issues since the 29th of March 2020. There's also some free mediation services to tenants and landlords in relation to assisting them come to some kind of rental commercial outcome in relation to rental payments. And there's also relief for commercial rent hardship of up to $150,000 per business group, where it can be shown that the business has sought negotiation in good faith with a landlord, but unfortunately no sort of commercial outcome has been reached. So that's quite significant if you are having discussions with the landlord and your discussions have fallen on deaf ears and no one's come to an agreement. So there potentially is some significant assistance there that you can look into and tap into. Now, to be eligible for this nighttime support package, you have to operate as a licensed pub, club, restaurant, or as part of a group and have appropriate licenses in terms of liquor licensing and so forth. You have to employ people, have an annual turnover of less than 50 million at each individual premise within the group, and hold an ABN as at the 16th of March. Have to be carrying out an operation where you are a tenant. You have to have a reduction in turnover of at least 30% at one or more of the individual premises also. And effectively, this also applies if you do not qualify for the earlier Victorian Government Commercial Tenancy Relief Scheme that was introduced as part of the pandemic earlier on in the year. A lot of these programs, just be wary, is that that they can be all applicable online. So if you are having trouble applying online, please give us a call and we're more than happy to assist with that. But effectively, all the applications for these programs can be made online. The next tranche of assistance is just touching on what's out there for the regional tourism accommodation businesses. So effectively, what the government announced was that if you're an accommodation provider across regional Victoria, you can effectively claim payments of $225 per night, up to a maximum of $1,125 per booking that was effectively cancelled by someone that was going to travel to your establishment on a holiday or for whatever, but just some R&R, I suppose. So effectively, if you've got cancellations that you've refunded, you're able to get some assistance there per night in terms of up to a maximum of $1,125 per booking. Who can apply? So effectively, accommodation providers within 11 Victorian regional tourism regions can apply. So that includes all the rural councils, ski resort areas, and sort of the peninsulas as well. And you must be registered, obviously, with an ABN prior to 30th of June to make a claim. And again, the claim can be made and the application can be made via the Victorian Government website. And again, it's just around the eligibility criteria of a lot of these offerings. One aspect that's very important, I suppose, is the well-being and mental health support that's on offer as well. The Victorian Government has teamed up with St John's Ambulance mental health area of support, and you can go into that area of the website and they can actually show the support that's on offer for Victorian businesses out there that are seeking some kind of support in that space. And they can certainly get assistance through the St John's Ambulance partnership that they have with the Victorian Government. So that's just an area that you have to look into yourself and whether or not that applies. But it is an important area that we have to look into because the pandemic has unfortunately affected a lot of people and a lot of businesses out there.
So one of the questions we've had, Sash, come through is around, there's been a number of grants there, but there was the cash flow boost. The cash flow boost was something that was announced early on in COVID.
That's right. I suppose this what I've announced wasn't effectively an exhaustive list. There was more of recent time what was announced in terms of government support, but the cash flow boost is one that was announced a little while back and effectively gets paid when the BAS is lodged for pay-as-you-go withholding. So if the March quarter cash flow boost, you would have received payment, and then you got the June quarter cash flow boost, which effectively ties in with the September quarter as well. So they're still in existence. Yeah.
So really around the cash flow boost, I think what's important for clients is to contact their Wilson Pateras accountant and have their BAS essentially completed, lodged on time. And if you're qualifying for the cash flow boost by being an employer, you'll generally speaking get that through your business activity statements.
Yeah, that's correct. That's important to have done sooner rather than later. That's correct.
Well, thank you all, and I'll share these results with you around the poll. It's interesting just to see where everybody sits as a Wilson Pateras community, particularly around how this has affected us all. As you can see there, quite a lot of our clients have registered and received JobKeeper 1.0, and quite a large number, so 85% in both cases, should be expecting to be eligible to receive 2.0 and potentially 3.0 JobKeeper. And then in question number 3, to what extent has your business been affected financially by the latest restrictions? We can see there the vast majority of businesses have been impacted somewhat severely. So I think as a result of that and today's presentation, encourage you all as clients to keep in regular contact with us to make sure that you are getting the best and most effective grants that you can possibly receive under the various government incentives, and also work closely with your Wilson Pateras accountant around understanding your business and how to manage yourself over the next period of time. One thing I'll just like to say in conclusion, and thank you for Sash and Mark for presenting today and for all of you for attending, but one thing I'd like to say in conclusion is I think we can expect this current period to go on for some time, whether that's in the current stage of stage 4 or some sort of stage 3 or stage 3A or whatever that might look like. So making sure you're planning your business the right way with government assistance, but also ensuring that you're looking at all the important aspects of your business. It's cash flow, it's turnover, it's employment costs, the amount of capital that you have set aside for more difficult times. I think it's fair to say we're going to have a reasonably prolonged period of what we call headwinds in the business. It's going to be a little more difficult to do certain things. So what we'll be doing post this event is, as I mentioned, we'll be going back to all our participants, and anyone who's had questions unanswered, we'll touch base with you and ask you answer those questions for you. And so, in conclusion, just like to thank you all for attending. Thank you to the attendees as well, the participants rather, Sash and Mark, in putting forward today's presentation. It's been very informative, and we hope to see you all again sometime soon.
Thanks, everyone.
Thanks, guys. See you soon.
Thank you.